Bonds slide, yen dumped as hobby charge hikes loom. Singapore Asia's stock markets edged decrease on Tuesday. The yen hit a 20-year low and bond markets wavered as buyers nervously awaited U.S. inflation figures and central bank meetings in Australia, Europe and, next week, within the United States. British Prime Minister Boris Johnson survived a no-confidence vote among his Conservative Party's lawmakers on Monday. However, gilts and treasuries nursed losses from promoting that commenced as communicate of a move to update him collected steam via London and New York Exchange. The 10-year Treasury yield rose 9.9 foundation points (BPS) in a single day and hit 3.0580% early within the Asia consultation. The move has pulled the dollar higher and poured cold water on preliminary optimism about China's emergence from COVID lockdowns. U.S. The greenback introduced another 0.6% in opposition to the yen on Tuesday to touch 132.75, its highest because 2002, as the Bank of Japan is a standout laggard at the same time as the rest of the sector movements to try and hit inflation tough with hobby charge hikes. FRX 10-year gilt yields rose as far as 10.2 bits per second to a 7-year excessive of 2.256% on Monday. GBP. The train of idea appears to be that any path to an in advance British election may want to cause extra financial measures out of the United Kingdom, stated NatWest market strategist John Briggs. This in turn has better inflation dangers, he stated. At the same time as across the Atlantic, the marketplace sense is one in all again to where does this forestall as the 10-year Treasury yields crowned 3%. MSCI's broadest index of Asia-Pacific stocks outside Japan fell 0.8% as Hong Kong's market pared back a number of Monday's profits. Japan's Nikkei inched up 0.3%. Beijing is easing COVID curbs, and on Monday the Wall Street Journal mentioned that a cybersecurity probe of ride-hailing giant Didi could cease quickly, triggering a wave of brief covering across the net sector. Even what had been resounding China relief, driven through easing regulatory risks and COVID regulations, is about to be paralyzed with the aid of the risks of liquidity withdrawal and danger repricing shocks, stated Mizuho economist Vishnu Varathan. Wave of hikes. Later on Tuesday, Australia's vital financial institution meets to set hobby prices, with traders positive of a hike of at least 25 foundation points (BPS). Markets are pricing approximately a 3/4 hazard of a 40 BP hike that could carry the coin's charge to 0.75%, and analysts assume a upward thrust of that significance should carry the Aussie greenback with it. A consensus hike of 25 bits per second could probably see the AUD slip slightly, stated ING's Asia research head, Rob Carnell. Fear that a hot U.S. inflation analyzing on Wednesday will lock in even more Federal Reserve interest fee rises past subsequent weeks' expected 50 bits per second hike stored the U.S. dollar on the front foot within the meantime. The Australian greenback wobbled 0.4% decrease to $0.7169 in morning alternate against. The euro become pushed 0.2% lower and underneath its 50-day shifting common to $1.0677, however kept from further losses by way of nerves approximately the opportunity of a fee hike or hawkish tone from the European Central Bank, which meets on Thursday. The yen turned into friendless after Bank of Japan Governor Haruhiko Kuroda stayed dovish on Tuesday, promising guide for the financial system and clean economic coverage at the same time as charges begin to upward thrust. Crude oil changed into company and Brent futures held at $120 a barrel. The upward thrust in U.S. yields weighed on gold, which dipped a fraction to $1,839 an ounce. Investors' apprehensive mood additionally clipped cryptocurrencies, and Bitcoin changed into ultimate down approximately 5%, just beneath $30,000.